Hello, welcome to my channel today. This is King's Tutor. It's the first time of joining us. Thank you for clicking to this. Ensure you like, comment, share, and subscribe to this channel. Okay, now I want to continue on our joint venture. We've seen the introduction video. If you have not watched that, ensure you watch that. Check in my description or you check up here. You're going to see the introduction video, another example. I want to see an example that want to solve a different question on joint venture. Okay, now let's see the question. The question said, John and Felix entered into joint venture on 1st July 2018 to purchase imported goods worth 16,000 naira. John contributed 11,000 naira of this and Felix supplied the balance. On 15th July 2018, John paid import duty of 1,000 naira and on 6th August, warehouse charge of 800 naira. He made the following cash sales: 26th of July 7,400 and 30th July 2,800 naira. On 15th August, the venture was completed and John took the balance of 1,400 naira worth of goods into his own business. On 16th July, Felix paid carriage of 280 naira, insurance of 120 naira. His cash sales were 8,400 naira. Profit have to be shared in the proportion 2/3 to John and 1/3 to Felix. You are required to prepare the first one, a joint venture account in the books of the ventures, and the second one, the joint memorandum account. Okay, now advice you before this, ensure you watch the introduction video where we saw the introduction of joint venture in terms of its definition, the advantages, the format, and where to post what we are posting. Okay, check in the description, you'll see that. Now let's get into this proper. Now in the question, they're asking us to prepare a joint venture in the account in the books of the ventures and the joint memorandum account. Okay, so this account will be prepared on behalf of John and Felix. So let's have our joint memorandum account. We have the joint memorandum account. Now also, we can also have in their individual ledgers. Now we'll be having also for John. So write in John's ledger, joint venture with Felix. That's how you write it for each of them. And also write in Felix ledger, joint venture with John. Okay, so now we're going to post it now. Now the question said, having our question, it said they enter into a contract on 1st July 2018 to purchase imported goods, okay, worth 16,000. That's their combination. Now I say John contributed 11,000 of this and Felix supplied the balance. Okay, so we're going to write in John's ledger, purchase, he paid 16,000. Okay, and they said the balance was paid by Felix. So also have purchase by Felix. The balance will be 5,000. Now remember, we said in the introduction video, In terms of the expenses, you post at their debit side. Okay. Now, why this now will be for the joint memorandum purchases of 16,000, which is combination of the boats. Okay. Sorry, this is supposed to be 11,000. 11,000. So that is the first one. And the next question said, on 15th of July 2018, John paid import duty of 1,000, and on 6th August, warehouse charge of 800. Okay, import duty of how much? 1,000. So we'll come also to the joint memorandum and write import duty by John 1,000. Okay. And also the question also said, and on the 6th of August, warehouse charge of 800 was also paid by John. So write warehouse of 800. I'll come also here, warehouse by same John 800. Okay, so the next one we'll have, it said he made the following cash sales on 26th of July 7,400, and on the 30th of July 2,800. Now we said when it comes to sales, what will credit their individual ledger account and also the joint memorandum account. So they said John made sales at different times. Now the first one they said is 7,400. Okay, so we have 7,400. Why the other date was 800, 2,800. So once we add the two together, we'll have 10,200. Okay, now we'll come to the joint memorandum account. Now we'll have our sales. Now we'll have sales here for John. For John, we'll have 7,400 and 2,800, which will give us 10,200, and that's their sales. Okay, now the next question also said on 15th August the venture was completed and John took the balance of 1,400 worth of goods into his own business. Okay, so we said when goods are taken over by the co-venturers, we'll credit the account and also credit the joint memorandum. We've done that in the introduction video. So write in John the goods taken. They said it is worth 1,400. Okay, now you come to this part. Right, John goods taken also 1,400. Okay, we're indicating the name of the co-venturers. Okay, so the next one, it said on 16th July, Felix paid carriage of 280. Felix paid a carriage of 280. Okay, now come to Felix. He made an expense, so right here, a carriage of 280. I'll come to the joint memorandum. We also have right carriage, but this was made by Felix, 280. Okay, now we'll continue. Insurance of 120. Now also said insurance here, insurance of 120. I also have insurance by Felix is 120. Okay, now continue. I said his cash sales were 8,400. His cash sales were 8,400. Also, the same way, sales for Felix was 8,400. Okay, so you come to the joint memorandum also, and you have also sales by Felix 8,400. Okay, now and they say profits have to be shared in a proportion 2/3 to John and 1/3 to Felix. Okay, so we have their profits sharing ratio. I say for John it is 2/3, while for Felix it is 1/3. Okay, so when you get to this point, after you've recorded their expenses they incurred and also the sales they made, and also do that in the joint memorandum account, and the next thing now is to